Welcome back to Editors Roundtable on CNBC-TV18. Well, this year was quite a volatile one. While India outperformed with a 5% gain, most markets were down about 20% globally. But we decided to take a quick picture on what's happening in the mutual fund industry. And we've put together data on the top 5 mutual funds in 3 different categories: large, mid and flexi cap. And within that, what are the stocks that mutual fund managers picked which helped them outperform? So let's begin with the large cap funds. Now, in the top 5 funds, if you look at it, the 3 funds on top, Nippon India Large Cap, HDFC Top 100 and ICICI Pru, are the ones that outperformed the benchmark with outsized gains of 12 to about 17% odd. So we decided to do a deep down and find out what are the stocks that helped them get there. Now, banks and financials were the top bets of Nippon India, and hence this fund has really outperformed the benchmark. They have HDFC, HDFC Bank, SBI, ICICI Bank as their top holdings. And of course, they're also betting big on the manufacturing sector. The top sectoral bets, apart from corporate banks and financials, is energy and utilities. So perhaps this will give you a hint of the year to come as well, since it's in their top holdings. Now, apart from that, the other funds as well have this bent of, financials within them. And hence, let's take a look at that too. The next plate should come up for you. Infosys, Reliance, NTPC, ITC are a couple of top counters there. ICICI Pru Blue Chip is also focusing on banks. They have ICICI Bank, of course, HDFC Bank, Axis, but they're also looking at both energy as well as capital goods. So Reliance and L&T forms a big portion there. Let's move to the mid-cap funds. Now, in the mid-cap funds, the best performing funds are these 3: HDFC Mid-Cap, Nippon India and Sundaram Mid-Cap, which have gains of around 9 to 16%. What stands out is after a very long time, the HDFC group is back with a bang and seeing outsized returns. And in the Mid-Cap Opportunities Fund, if you look at it, there is this reopening trade which has helped these funds. So whether it's in Indian hotels, whether it's a couple of others in this space. They also have the defense space that has worked well for them with BEL and HAL and a couple of financials within this space. So that's really what's worked for the Opportunities Fund. Even if you look at the Nippon India Growth Fund here, once again, there's the reopening trade, there's Varun Beverages, and then they have names like Chola Financial, which seems to be a very popular pick within the mid-cap fund basket. Now let's move on to the next plate. The top holdings over there will come up for the Sundaram Mid-Cap Fund. There as well, you have financials, which tops the charts, and Varun Beverages, which seems to be a favorite amongst the mid-cap fund managers. Let's move to the best performing flexi cap funds then. Once again, HDFC Flexi Cap topping the charts with almost a 24% return. And then you have ICICI Pru Flexi Cap and Franklin India Flexi Cap. So these are the funds that have given you 10 to about 23% returns. A quick look at the holdings over there. Once again, what tops is banks. So SBI, ICICI Bank, HDFC Bank, along with Infosys, that of course has underperformed. But let's see how the year to come shapes up. In ICICI Pru, you have TVS Motor that stands out, which has of course given you outsized returns. And then let's move on to the final plate where we do have the other flexi cap funds with the kind of stock holdings that they've generated. Now, the big takeaway for me is after many years of underperformance, the HDFC group is back, and the mutual funds from the HDFC group have seen the best performance. So, Nilesh, let me throw that question to you. One thing that worked, of course, is financials for mutual funds, and the other is the reopening trade. We spoke about financials. In this reopening trade, anything that you like?
So I think in the reopening trade, the entire hospitality pack, I think that's still continues to be looking very, very good. The retail space has again been fantastic. You have seen people coming out and do revenge shopping. So that's again a great area to be in. So I think the hospitality kind of as a theme will continue to perform well. I think as a sector, it did very well in 22. I think in 23 it will continue to do very well. So that's kind of going to be a great place to be in.
Nilesh, the 2 big conglomerates which have done well, and they've been consistent performers. The groups from the south, TVS and Murugappa, both have done well this year. Within that list, anything that excites you, something which you've been owning in your portfolio as well, whether it's TVS Motors or for that matter Tube Investments, even CG Power has been a big outperformer in the last 2 years. Anything that you like?
Yeah, so we've been owning both. In the Murugappa group, okay. And there we've been owning names like in the past we've been owning names like CG Power, but obviously we kind of bought it at a very attractive level in 21. 22 has been really very strong. It now trades at 70-80p, trailing earnings. Okay. So that's the big challenge, and we've actually exited very recently out of that, given the kind of valuations which are there. But I think these are great names, great groups, and I think if the opportunity comes in again, we'd be happy to kind of step in. But clearly, Murugappa is one group which is really well positioned. I think for the growth in India, the entire infrastructure space happening, the capex revival. If I were to kind of really look at proxies for that, I think Murugappa clearly stands out as a group to really bet on.
The other sector which has done relatively well is the real estate sector in 2022. And given there are a lot of tailwinds now for that sector, you think that's the space to be in for 23 as well?
Oh, absolutely. I mean, clearly, real estate actually is yet to get into a bull market.
Right.
Yes, we've seen some demand come back. A lot of the inventory which builders were holding on to, that's like kind of gone. There's a fair bit of momentum on the luxury side, the premium side. But I still think that the bull market is not yet there in real estate till the prices don't start kind of moving up. We're seeing some early signs of that, but it's still not good enough. But it's surely a space to bet on, especially, and I think a great way to play real estate. One is, of course, the real estate developers, but the other is the building materials and the housing finance guys. I think the housing finance guys, and the first sign from RBI that the rate hikes cycle has peaked. I think you'll see some solid outperformance there coming.
Okay, that's enough talk about the markets, right? Where's the party tomorrow night?
No, I'm going to be at home.
Actually, you're asking a wrong person. He's a very simple guy.
I was going to say, he's not told you guys.
Maybe all of you are invited. I'm definitely not.
No, I'm just going to be at home. So, yeah.
You know, it's the first time, the first is a Sunday, so there's no markets on the first.
Yeah, absolutely.
So all of us are actually officially getting a holiday for the first time in a very long time. So I'm going to be out and about. I don't know about you guys.
Last year also we got. Last year was Saturday. This year is Sunday.
Oh, yeah. But maybe last time for a very long time.
Yes.
So make the most
For
of
next
it,
5
folks.
years you won't get now. Because
Okay.
it will be Monday, Tuesday, Wednesday, Thursday, Friday.
Remember that, folks. So the next 5 years, markets are going to be open on the first. So make the most of it and have a great 2023. Wishing you health, wealth, happiness, and everything in between from the entire team at Editors Roundtable. Thanks a lot for watching.